We're now going to look at the trade I did on the 11th of October on the Dow in some more detail to show you precisely how you could have turned £300 into over £8,000. We'll also go into various other lessons to be learnt from this trade. I find that even the simplest trading situations often produce interesting material which, if you consider properly, will lead you further along the road to success. So first we'll reiterate the 5-wave pattern, and so we had the 1, 2, 3, 4, then we had the 1, 2, 3, 4, 5. So I went short at that point. Now the first lesson here is, as I said, that we often miss the actual peak. It's sometimes said that only liars catch the highs and lows. Not quite true. Occasionally it does happen, but not commonly. Normally we don't catch the high or the low. We either get in too early or too late. Too late is actually better in a way, because at least if you get in too late, you may not get the peak, but you will catch the move. But if you get in too early, then the move is going to go, as in this case, going to go higher. Those of you who have done some spread betting will be aware that this can be fairly disastrous. People who spread bet tend to put in stops, because otherwise your potential risk is unlimited or virtually unlimited. Therefore, if you're too early, the market continues to rally and you get stopped out. This is one of the big advantages of binary bets. You never get stopped out. The market goes higher, your bets obviously lose money. They are cheaper than they were when you positioned. But you are still in there, so as the move comes in, you're still there to benefit from that. Right, looking at the chart again, we'll see we then saw this little blip up higher. So we got in early, no problem, market came down, and we're doing very well, thank you. Now at this point, I want to look at another chart. Right. This is again a 5-minute chart. Now this one I have entered on the 5-wave pattern, which we need to look at. Right. So we've got the 5 waves up. I've amended the 5-wave count here to accommodate the 5th wave we've seen. One of the common problems with Elliott is that it's easy to mistake the 4th wave decline for the start of the new move. We treat the wave 3 high or low, if it's in a downtrend, as the end of the move, in fact the wave 3 as the wave 5, and we short at the end of wave 3 and leave ourselves exposed to the wave 5 rally. Just something to be aware of. Now, at this point, I took 3 trading positions. Now, the 3 in question were itemized here. So, at 17:59, I sold Wall Street to finish up more than 50 points. Now, I got 83.4 for that, and that means, because binary is only moving between 0 and 100, that I was risking 16.6 points. Because I'm selling, my exposure is to the upside. My profit potential is to the downside. So having sold at 83.4, if the bet were to go to 0, I would bag the whole 83.4. But if it goes the wrong way, then I'm exposed only to the upside, 16.6. I want to make an important point here. One thing I've realized running Lunchtime Trader is that novice traders are fixated on the potential profit they make. When I wrote The Way to Trade, I detailed the evolution of a trader, and I used the terminology greed-orientated for the novice trader. And I realized I'm never really very happy with that term, in fact. It never struck me as being quite right. And in fact, it's not right. The correct term is profit-orientated. The novice trader comes into the market and all he thinks about is the profits he might make. This is fatal. This is a fatal flaw, because what you've got to fixate on is your potential risk reward. If you only look at profits, you ignore the risk, and the novice trader always gets a kicking by the market at one point or another. So I think this is perhaps the key lesson that the novice has to learn. Once he's had his kicking, he then focuses on the losses. He becomes loss orientated. In my book, I call this fear orientation. That's more appropriate because when you look at losses, you become fearful. But neither focusing on the profits or the losses is useful. You must focus on the risk reward. So again, in my book, I call the final phase risk orientation. But in fact, it's risk reward orientation that's the key thing. Now, the second bet I bought at 6 o'clock, well, I sold the first bet. I then bought Wall Street to finish down. Now, this cost me 2.9. You don't really get binaries much cheaper than that. Actually, the next one is cheaper than that. But anyway, a 2.9, that's all I'm risking, 2.9 points. The potential is that it goes to 100. If it goes to 100, then I make 97.1. Okay. Now, you can't go far wrong at 2.9. Now, think about that. Can you go far wrong? Yes, you can lose all your stake. So please think about what I'm saying. Don't just accept what I'm saying. And finally, I sold the Wall Street cash low to be greater than -20. And I sold that at 98. So in fact, my risk there was 2 points, with a potential profit of 98 points. Now, selling the Wall Street cash low to be greater than -20 is somewhat confusing, perhaps. What I was looking for was for Wall Street to make a lower low below -20. In that case, that bet would be untrue, and I would bag the profit. Right, how did it work out? Well, firstly, let's have a look at how we risk £300 to make 8,000. Now, it's all illustrated here. Right, all of those bets went all the way. So the bets I sold went to 0, and the bets I bought went to 100. Now, what I'm saying here is we'll risk £100 on each bet. So the 3 points are: we won 83.4 on Wall Street to finish up greater than 50 points at £6 per point. So the risk was 83.4 times £6, £500 and 40p. Okay, that's quite a clear profit. It's not a huge profit. I mean, £500 is not £8,000, but this is where the beauty of the cheap bets come in, because if you're only risking 2 or 3 points, you can bet a much bigger size. So, Wall Street to finish down, the risk there was 2.9. Okay, so with that bet, I could risk £34 a point. Okay, so the risk on that bet was, I mean, around £100 again, but I won 97.1, so that was a £3,000 profit. Okay, on that one, and again, showing how important these points are. I mean, 2.9 yields £3,000, but the Wall Street cash low to be greater than -20, because it's only risking 2, it's £50. £50 a point. That's a lot more. That's 50% more than the previous position. So the winning on that was £4,900. Now, each bet was a risk of approximately £100, as I said. I actually made a mistake when talking about the Wall Street to finish up 50 points, because it wasn't the risk that was £500, it was the reward that's £500. So the total winnings there was £8,701.80p from a total risk of £298.20p. Now, what's also particularly appealing about this sort of form of trading is that took less than 3 hours. So it was a fairly simple trade. The market behaved itself impeccably. Okay, it went a little higher, but didn't bother us at all, didn't bother me at all. And of course it came down dramatically. As I've said before, and I'm going to keep repeating this because it's an important point, the market is not going to do that every time. It's as a trader, our job is to position ourselves and then reap our harvest. But sometimes our seeds fall on stony ground and the harvest is not as much as we might like.